Everyone, welcome back to Mindful Investing. Today we are diving into a stock that's been on an absolute tear this year, and that's IREN. It's up more than 580% year to date. So the obvious question is, what's driving this insane move? And more importantly, is it still a buy or is it time to stay cautious? Let's break down IREN's business model, what's behind this massive rally, and I'll share my honest take on whether I would invest in it right now or not. So first, let's see what exactly is IREN. Formerly known as Iris Energy, this company started out as a Bitcoin mining firm but with a unique twist. It ran its operations using renewable energy sources, primarily hydropower, that made it more efficient and eco friendly than traditional crypto miners. But here's where things get interesting. IREN has been quietly reinvesting itself. Over the past year, it's pivoted from pure Bitcoin mining to building AI and cloud infrastructure, essentially using the same data center and power backbone to serve a much bigger market, and that's artificial intelligence computing. They have secured partnerships with Nvidia as a preferred infrastructure partner, and they are now expanding their GPU based data centers to power large AI workloads. That's a huge shift from mining digital coins to powering the next wave of AI innovation. So the business model today is evolving toward AI driven data centers, leveraging their renewable powered facilities, and that's what has the market excited. Now let's talk about why IREN stock exploded this year. There are a few key drivers. The first one is their AI hype and GPU demand. Every company connected to AI infrastructure, from Nvidia to super microcomputer to Broadcom, has seen huge demand. IREN, being part of that supply chain, has benefited from that narrative. And the second one is their Nvidia partnership. IREN announced a major GPU purchase and collaboration with Nvidia, which added instant credibility to their pivot. Investors now see them as an AI data center play, not just a crypto miner. And the third one is existing infrastructure edge. Here's something most people overlook. IREN already owns the land, power contracts, and grid connections from its crypto mining days. That gives them a massive head start in building new data centers, something that takes competitors years and millions of dollars to replicate. And fourth one is their strong earnings momentum. In the recent quarter, IREN reported a surprise profit with EPS of 65 cents, far above expectations. Revenue came in around $180 million, showing that their strategy is starting to deliver real financial results. Putting all these together, you have got a perfect storm of growth, hype, and validation. And that's what sent the stock soaring. Now let's step back and look at their fundamentals. IREN has a total cash on hand of $564 million with total debt of $964 million and a free cash flow of negative $1.1 billion because the company is in a heavy investments phase, spending aggressively on GPU expansion and data center buildouts. That means capex is high, margins are volatile, and there's always the risk of dilution if they raise new capital. And according to my model, IREN has an upside of 34% in 1 year, which puts the stock at $93, and a 149% upside in 5 years, which will be around $170. The opportunity is clear, but so are the risks. This is a company transitioning from crypto to AI, and while that shift can pay off massively, it also comes with execution risk. Let's look at the major risk to consider before investing. The first one is their valuation. After a 580% move, expectations are sky high. A lot of future growth is already priced in. And the second one is their execution. Managing AI data centers is far more complex than crypto mining. Scaling customers, uptime, and performance will test their management's capabilities. The third one is their supply constraints. GPU supply remains tight globally. If IREN can't secure enough hardware at reasonable prices, growth could stall. And the fourth risk is their regulatory and energy risk. Power prices and environmental policies can shift quickly. If energy costs rise, profitability will take a hit. And the fifth risk is competition. Giants like AWS, Google Cloud, and Microsoft Azure are building massive AI infrastructure, and niche player will need to find their space carefully. So while IREN's story is compelling, this is not a low risk play. It's a high risk, high reward growth story. Now the big question is, would I buy IREN today? My honest take is, at current levels, I wouldn't buy in. The stock has run too far and too fast. But that doesn't mean it's a sell today. If you believe in the AI infrastructure theme and in IREN's ability to execute, then it absolutely deserves a spot on your watch list. Personally, I will consider building a small starter position and look to add on pullbacks, ideally near support levels or during market corrections. In my model, I'd assign a moderate conviction rating with strong potential but with equally strong execution risk. If they continue delivering on revenue growth and AI partnerships, IREN could still have a lot more upside over the next 5 years. So, to wrap up, IREN's transformation from a clean energy Bitcoin miner to an AI data center powerhouse is one of the most fascinating pivots we have seen this year. And this 580% rally reflects huge optimism but also high expectations. If they can keep delivering operationally, we might just be at the beginning of a long term growth story. But if execution stumbles or the AI hype fades, this stock could pull back hard. So stay disciplined, watch the fundamentals, not just the headlines. That's my take on IREN stock. Let me know in the comments below. Do you think this AI hype is sustainable or is it just hype? Would you buy IREN at these levels or wait for a better entry point? If you found this breakdown helpful, please give it a like, hit the subscribe, and turn on the notifications for more data driven investing insights content every week. Thanks for watching, and as always, invest smart, stay patient, and I'll see you in the next one.